Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It is April 18th. This will be our chart lesson for today. And what we had today was a large range. And notice your overnight low here. We never got outside of that. Here's our overnight high. We never got outside of that. We had a trend up, trend down, trend up, and even though we couldn't get back down there, we were trending down here. A lot of sideways action, but notice the highs are generally in the same level and you're making lower lows every time. So that's a good sign that prices are probably going lower. But not a terribly difficult day at all. Fairly straightforward. It's just a range day and you got trends back and forth. I mean, it's a relatively nice, I mean, it's not a huge range, but it's big enough that you got a trend. Notice the highs are around 27.18. Lows are around 27.04, I would call it. So about a 14-point range, which is not bad. There's enough room there to get a nice trend and make some money, if you get a setup, of course. But let's back out a little bit here, talk about the trades. And there's quite a few trades today, especially for a range day. There's a few trades here. Um, when I came in, of course, we were working on this second leg up. We had one leg up, we're kind of going sideways, and then we break out. And so you're looking for, a second leg up, probably a similar measured move. There's your first leg, and you're looking for that. And you notice we got almost a perfect measured leg. But notice how we started finding resistance right there, and we're going sideways, and you got a little double top right there, and you make that one tick higher, and then it turns down quickly and closes very negative. Look how far away we are from the EMA. Notice we never tested that breakout area. We're coming back to the EMA and here probably at a minimum. So I like going short there. Generally, you want to wait on that lower high, which doesn't come to down here, but I still like that one. You could probably argue for it to be green because generally you want that lower high. But sometimes if you catch that major high, it pays off well. If you catch this one, you catch the high of the day, and you can really ride that quite a ways. Notice how they almost came back enough to get the break-even stops, but they couldn't quite get them before it sold off there. And I'm assuming that's why this rallied so hard, because they were coming back for those break-even stops. And they couldn't quite, because they didn't get them here. They didn't quite get them here. They missed them by a tick. And then again, they missed them by a couple of ticks and it drops down. So, but I like that one. There's a lower high here. And again, if you want to be really aggressive, you might take that. But notice how it's right into the EMA, and notice how it's stalling there. It could easily bounce and stop you out and then still go down. So wait on that reversal. Notice how then it pushes through, pulls back, and makes that failed second entry long, gives you a big bearish bar below the EMA. I like going short there. And it runs on down. Unfortunately, you don't get any big time. I mean, there's more than a point there, but you don't get any big time runners. It comes back and makes another two-legged move back. Notice the new low, pull back first entry, pull back second entry. And that's a big bearish bar. I like going short right there and then looking for another leg down. Measure that leg. And so you're looking, and that gives you a target right down in here. And after we got this next low here, just notice how it drops on down pretty quickly. Once we got that new low, I kind of drew that trend line and drug it up. And so then we would come back, it goes right back to that trend line. And notice there's two legs back. Generally, I would want a much better signal bar than this, but this actually broke higher first and turned back down and went straight out the other side. So I like going short there. You could also wait on this bar to close and let it break lower and drop a limit order back up here a tick below that one where you would have originally entered, and it would have filled you. You got to be careful getting short way down here because you're back into some more support. Notice there's a low right there. As long as you got room to get out, you're probably okay to go ahead and go short there. But I probably would have, if I would have waited on this bar, I probably would use a limit order and try to get a tick or so back into this bigger bar because it's really big and it's close to these lows, but doesn't matter either way, it still works. And then you get your failed second entry short right or long right here, and you're not quite back down to the lows. So you're probably going to push on down, and notice it confirms that trend line right there too. But more than anything, it's your breakout pullback. Notice when we broke through this area, we never pulled, we pulled back and tested it right there and then turned on down. You get another little jog right here, but that's your first break of that little short-term trend line. You're coming off the lows. You don't know if it'll get through there. Even though you may be headed down here, you probably need to skip that trade. And then, of course, it bounces down here off the lows. And it does make one tick lower, and you're really a long way away from the EMA. But generally, you want to wait on that lower high or your reversal type pattern. And that one's, I like these, and it's just very similar to this one up here. So I'll be honest with you, if you're that far away from the EMA and you already had a break in EULA and you get that little matching bar and it breaks lower, I'm probably going to take that every time because it's a small bar too. It's only 3 or 4 ticks in it, so not much risk. And it just, and if you catch that one, look at that move. If you catch those 2 trades, you definitely get a runner on them. At least you definitely get one on this one for sure. And depending on how you entered this one and how your chart looks, you probably get a runner on it too. This did pull back and stop out a runner on my chart, but you may have got one on yours there. If you entered here with a stop, if you let it break lower and use a limit order, now you might have got a little more on it. And that's assuming that you moved your stop to break even too. So it depends on how you play that, either one of those. But I would definitely recommend moving your stop to break even, or maybe just a tick below, so you don't give back everything if it comes back for the break evens. But it's worth giving it a little room here and risking some of your scalp profits to try to get a runner, because look what happens. You get to ride this all the way down, or you get to ride this all the way up. This one you might have gotten spooked out by this larger correction. But this one, there's no denying it just takes off and it's gone. And notice too, we got an overshoot here on this channel. You could consider this a break, but really you had a break before you even knew you had a channel there. So that's kind of iffy. But when you get the overshoot, that's good enough for a reversal. Plus it bounces off the overnight low. That's another reason. And you actually get a higher low right here, and it actually went lower and turns and goes out the upper side. I'd probably take that one. It's a little bit aggressive because it's not a true reversal pattern, but it's probably worth risking. And then you get your true reversal right there. So the only problem with this one is it's right back into that trend line, but I still think it's worth taking because I guarantee you there's some shorts that gets trapped right there. If they're watching that trend line and see that trend line. And you can see it didn't really take off super strongly, but it just keeps working up. So that tells you it probably didn't trap a whole lot of people. But if you're looking at the big pattern, this is probably a range day. We had an overshoot. We actually had a break here, all that stuff. You probably want to risk that one. It's real close. You could call it green too, because it is a little bit aggressive maybe, but because it's that reversal pattern that we've seen over and over, and this looks like a range day, and everything's playing out perfectly for a range day, and you do have the overshoot, you do have the break, then it's probably worth moving it to blue. And you don't really get another chance to enter in here. So that's the best chance, and then the rest of this stuff is all questionables. No good signal bars, no second entries, none of that. And it goes all the way back to the top. And then of course you make a lower high here, and that is a double test of this previous double top and a big bearish bar, a little bit of room in the EMA between that and the EMA. I like going short there. There's a reversal pattern here, but we never push through that EMA, and sometimes you get 2 legs up. So I wasn't as crazy about it because it didn't push on through the EMA, but it's still that reversal pattern coming off a high of a range day, and it is a lower high off this. You got a double top and then a lower high. So it's probably worth taking it if you want to be a little aggressive, and you see it would have paid off. It does come back to get the runners though. And this is very similar to what happened over here. It's a very similar pattern. So even though you don't have a second entry here, you might take that one. I didn't mark it because you still have that short-term trend line. That's the first close, and then you didn't make a new high, and by that time you get several different bars stacked up there. So I didn't mark it, but it is a very similar pattern to this one over here. So in that case, you might take it, but I think you're better off to skip it, even though it works. If this one would have broke on lower, maybe enter right there, but it doesn't. And then you're just kind of going sideways again. You got a bunch of bars stacked up, and you don't want to go short right into that. And notice how it pushes down. Then you get a little trap there, but we just came off this high, so we're not that far away from the EMA. So I was a little afraid of that one. I didn't mark it. I think you're better off to wait. You do have a short-term trend line working down through there, and it's the first break outside of that too, so it could have pushed down one more time. Notice how it comes up. You get a close outside, you move to a new high, and you get a little double top based off this one. And again, you get you get a couple of matching bar highs, and you break higher. It's not a real negative bar or real bearish bar, so wait on a lower high, and then notice how it breaks higher first and turns and goes out the other side. I like having a sell stop waiting on that. It's a little close to this, but we'd already pushed through and kind of cleaned that out. So as long as you got room to enter right here and get out before here, you're probably okay. So I like that one. There's actually a failed second entry long right here, but that bar is so big. Again, it went out the top and then turned out the low side, but the fact that we bounced right there again, that scares me on that one, and I don't think that one's worth risking it. Even though it is a failure, that looks like a perfect trap setting up. It didn't turn out to be that way, but you don't know that ahead of time. So you got to be very careful with those. And of course, we do get a little breakout pullback short. And again, it looks very similar to what we saw right here, another kind of a repeat pattern. So in that case, if you really wanted to take that one, I really wanted to mark it green, but I wanted to make sure I described it first. So I'm going to go ahead and put it green there. I didn't put an arrow there because I wanted to talk about it first, but it's that repeat pattern. And notice it would have worked. It's aggressive though, so just keep that in mind. And then we just bounce quickly. You don't really get a chance to enter that one. You get a close outside, and notice where we're finding resistance in that little one tick up, and you get a nice bearish bar. I like going short there. It's only good for a scalp, and then it bounces. And then you get a little failed break higher. Now that's the one that may end up in being a nice move. It's right into the 2 o'clock hour though. You're usually better off to wait on that lower high right here. And but it's that failed break that can really pay off for you. So I tend to like them, and so I marked that one with a green one, and that got us into the 2 o'clock hour. So not a bad day. Again, like I said, it was fairly straightforward, nothing too difficult. The only problem is range days tend to be difficult for newer traders because they don't understand the mechanics of the way these little ranges work, and it's hard to trust that every time it comes back that it's going to turn down again. So you got to wait on the setup, and like I said, generally you're better to wait on the lower high. But as you get more experience with ranges, especially tight ones, you'll get better at being able to determine what's likely going to happen, and you never know anything 100%. So but we did just come off this high, so you would expect prices to keep trying to work to the low. Now maybe we'll work on down here, or this, now that we're into, was the close and this was the reopen here on this bar, so it could all change. But a lot of times you'll see the rest of this play out, and we may come on down and test this low before it's over. We'll just have to see. But generally, that's the reason I don't like to use the price action from the previous day, even though it can come into play. Generally, I don't like to use the previous day unless, let's say we went lower below this. This is the low of the day, so you don't have any previous price action to show you where your next support may be. So then you go to the next day and notice there's a double bottom there. So that would have been where I would start looking. And if it went through that, I'd go down to the next. You got some in here, but that looks more like resistance. So then I'd probably come to down here, and you just kind of move down the chart. And same thing for going up. Once we broke above here, you didn't have anything up here, start looking across. And you got to go There's nothing over here for a while. There may not be anything here, but I would start looking over to the left. So in this case, I just marked it there. I didn't see anything over, so I just marked it there because that was in the overnight. And the rest of this, now you know where your high is until we break through there, and we never broke through, so there's nowhere really to look. We're back up at 2,700 again, so I wouldn't be surprised to see this thing run towards 2,800 before you know it, or we'll have to. The one thing I can say is the volatility has slowed down quite a bit. The volume especially, it's nothing like it was for a couple of weeks there. And I actually got an email from somebody that said that they really enjoyed sim trading that because it makes this seem so much easier. And that's that's why I don't like switching charts. I'd rather see people go to sim if it's too fast for them, or because you can get experience at it, and then when you come back and it gets to be normal again, it feels like everything's moving in slow motion. It makes it much easier for you. So keep that in mind. But I'm going to wrap it up for today. We'll be done for Wednesday. We'll be back tomorrow to wrap up the week. No chart lessons on Fridays anymore, so we'll be back to do one tomorrow, and then we'll wrap up the week. Hard to believe another week's almost over, but it is. But I'm done for today. I'll see you tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.